Here's a wonderful, nice little diagram that I had made up, and I love it. Thank you to my graphic designer, Mohammed, on that. And then we redid it a few times here. It looks very nice. Now, you're going to see this at the end of the lesson as well. So don't worry about memorizing this. We're just going to go through a nice overview of it. Couple points here. This is really concise. It's really everything you're going to need to know about this audit risk formula. We see here that audit risk is made up of these three other risks: inherent risk, control risk, and detection risk. Awesome, right? Awesome, awesome. I'm just going to break down this diagram. Now, we'll go through what these risks are, the definitions of them, couple points, and again, you're going to have time to memorize this. You'll see this diagram again. Another name for inherent risk and control risk is the risk of material misstatement. So if you see a question, right, so you could say audit risk is inherent risk times control risk times detection risk, or you could say that audit risk is the risk of material misstatement times detection risk. Points to know, these will get you questions right on the exam, making sure you're familiar here. While this is written out like an algebraic equation, and you can follow that, in reality, it isn't really used like that. It's just here for conceptual, to understand how this works. And like that being said, so for example here, if you have a multiple choice question that assigns numbers to these values, you can rewrite it just like any algebra question. So you see audit risk equals the three of these times each other. You could rewrite that, divide detection risk by both sides, multiply audit risk by both sides, and rearrange it just like you can rearrange the assets equals liabilities accounting equation, just like you can rearrange a lot of different formulas. Again, just a nice brief overview. We'll see how this works. Now, inherent risk, this is just, again, just generally, this is the risk that is just inherent in any company. So when you're dealing with a simple manufacturing company that you've probably audited time and time again, your inherent risk could be low because it's not very complex. And you can't do anything about inherent risk. Now, if you're auditing a complex, high volume derivatives trading firm, that inherent risk might be much higher, maybe let's say a 5 or a 6. You can't do anything about that. It's just inherently how the company operates, inherently how complex it is, the transactions it operates in. Now, these numbers are arbitrary. There's not a scale, generally these numbers, the higher they are, the higher the risk, but there's not a max. It's not like 10 is the highest, 5 is the highest, completely arbitrary. And again, this isn't really used in practice. This is just used for the exam to understand the concept here. Now, control risk, this is the risk that internal controls will not prevent misstatements due to error or fraud. And detection risk is the risk that you just will not detect something as an auditor. Couple important points to keep in mind. Control risk, you can't particularly control this. You can't affect it, but you can do more testing to discover what control risk is. And what you as an auditor have control over mostly is detection risk. Because let's say these two are incredibly high, well, what are you going to do? You're just going to test everything. You're going to test all the transactions, test the account balances. How do you test for control risk? Well, that's tests of controls. And how do you test for detection risk? That's going to be substantive testing, which is a synonym for tests of details. Like I said, these are arbitrary numbers, but you see here that 30 equals 2 times 5 times 3. Now, let's say as an auditor, you just want to keep audit risk at 30. Like that's what you're comfortable with. This is just 30 is okay. And again, super arbitrary numbers, not really worried about using these numbers in the exam. Now, inherent risk, you can't do anything, so that's going to stay at a 2. Let's say you want to drop this number, then how could you do that? Well, you could do more tests of controls to discover control risk and then possibly recommend that the client makes changes to their internal controls. But really, again, the main thing you're going to do here is affect detection risk. Now, theoretically, let's say you audited every transaction, every bank account, every account balance, and you audited every single thing on the financial statements. If you audited everything, then detection risk is theoretically 0 because you've analyzed every single thing. Now, what we see here, if we change this 3 to 0, well, anything times 0 is 0, so 2 times 5 is 10, but then times 0, it's 0. So the audit risk would be 0. Similarly, if the client's internal controls were spot on, not a single item could get through the internal controls, that would be incorrect. This would be 0. 2 times 3 is 6. Then we would multiply it by 5, and we would see that, by 0, because this is 0 now, and we would see that it's 0. Again, that's just a conceptual idea here. And again, some examples here. Inherent risk. what would inherent risk be? That would be a complex business model. Control risk, what would control risk be? How would you do this? You would test internal controls to see if someone can steal cash. And this is just substantive testing. We're going to have a lesson on this, of course. Testing to see if the cash balance is accurate, testing to see if debt balance is accurate, doing those actual testing to see if the balances and transactions are correct. Again, super high level here. We'll go into this much more later on, and we will dive in. Now to go into those definitions and talk about them further. Here are the components of audit risk. You're going to drill down these memorization points, these concepts. So audit risk, as we said, it's the risk that the auditor may fail to detect material misstatements and thus provide an incorrect opinion. Not good, not good at all. That's our one job, right? So our one job is to provide that opinion. Detection risk, as we said, how do we lower detection risk, or how do we just deal with it? Well, we perform more substantive testing, also known as more tests of details. It's the risk that the auditor will miss something or not detect it during the audit. It's the only one that the auditor can control, and you can lower it with the amount of substantive procedures the auditor performs. Control risk, this is the risk that a material misstatement will not be detected or prevented by the firm's internal controls. And that's a material misstatement due to fraud or error, just like any material misstatement could be due to fraud or error. Inherent risk is the risk inherent in an entity that's increased by factors such as more complex transactions. You have high employee turnover, that increases risk, poor financial performance, new financial reporting guidance, and obsolete inventory, all items that can increase the inherent risk within a company. Now, just want to go back to the slide actually over here. I want to go back to our nice little chart. Now, as an auditor, you don't have to get anything perfect, right? You have limited time, limited resources. So you may actually, if all of a sudden you determine that control risk is very low, and then let's say this 5 turns into a 1, see that there? Well, then what does our formula change to? Well, okay, 2 times 1 is 2, times 3 is 6, so audit risk would be 6. But let's say that we are totally fine with an audit risk of 30. We don't have to have a lower audit risk. Like, this is just predetermined, right? We're okay with an audit risk of 30. Well, then we could do less detection risk or less testing here, increase the detection risk to 15, which you might think, that's kind of crazy. Why would we do so much less detection risk? Why would we do so much less testing? Well, because we're okay with an audit risk of 30. And that's a concept I just want to get across. We are totally okay with that being our number. Now, if test of controls control risk ends up being a lot higher, we may have to do more testing, but we are totally okay with audit risk being that number because that was, let's say, predetermined within the planning period. Changing these back here. Just wanted to make sure to highlight that point. Moving back to what we've got here. Lastly, the risk of material misstatement is these two. This is the combination of control risk and inherent risk, and can be used interchangeably to mean the two of them. There you go. All right, just some terms to memorize. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.